Hello friends, today's topic, check this to know whether you are a good investor. I am Dr. Bharath Chandra. Purpose of the video is Financial Educational Society. Nifty closed about 24,000 mark for the first time this week. This rally reflects strong investor confidence and optimism, positive economic indicators and anticipation of policy stability of the new India government. According to a report by Georgia's Financial Services, during the rally from 23,264 points on June 3rd to 24,041 points on June 27th, only a few stocks contributed a majority percentage of the Nifty index rise, and so if you did not hold those stocks in Nifty, your portfolio movement would have been below the increase in Nifty. This once again shows that Nifty is highly dependent on a few leading stocks with higher weightage and hence will rise mainly when such stocks rise. Otherwise, even if the lower weightage stocks rally a lot, it may have a minor impact on the movement of the index. Top 5 contributors from Nifty 23,000 to 24,000. HDFC Bank, percentage change it has gone up 7.88% and the contribution 27.4% in the Nifty. Infosys change 11.91%, contribution to Nifty 17.3%. ICICI Bank percentage change it has gone up 5.16%, contribution to Nifty 12.6%. Bharti Airtel 6.09% has gone up and contribution to Nifty 7.1%. M&M percentage change 9.68%, contribution to Nifty 7%, total 71.4%. Now top 5 laggards from Nifty 23,000 to 24,000. Adani Ports has come down by 6.2%. The contribution to Nifty is minus 2.1%. Coal India percentage has come down is 8.8%. Contribution to Nifty minus 3%. Adani Enterprises gone down by 12.9% and the damage to Nifty is minus 3.6%. SBI has come down by 6.8%. Contribution to Nifty is minus 6.8%. L&T, it has come down by 8.5%. Contribution to Nifty is 11.3%. And these are the stocks which pulled Nifty by 26.7% down. As per the report by Georgia's Financial Services, between the 1,000 point rally of the Nifty 50 from 23,000 to 24,000, small cap index increased by 6.6, Nifty mid cap index jumped by 4.2%. Among these sectors, the report pointed out that IT went up by 11%, private banks were up by 5.5%, the services sector, automobile and healthcare also gained over 5 each. So, if you did not have the top 5 contributors or have limited money invested in those stocks, your portfolio may have grown lesser than the Nifty 50 index. However, small periods of underperformance compared to the index is not a problem. How to assess whether your portfolio is doing well? If you have a Zerodha Demat account, there is a feature to check XIRR or CAGR of your portfolio. You just need to click on Portfolio in your Kite app and click on Analytics and then View Portfolio XIRR. If your portfolio is more than 1 year old, you will be able to see what is the yearly returns on your portfolio has given. This XIRR feature may be able in some trading apps as well. You need to check. However, to judge the performance of your portfolio, ideally, it's better to have a portfolio which is older than 2 to 3 years. If your percentage XIRR or CAGR is less than the Nifty index appreciation during the period, then you are not doing a good job of investing in stock markets, since you could have just invested in an index fund and got better returns than a portfolio of stocks. There is a high chance that investors who started investing in the last 2 years will have a good XIRR, since overall markets and individual stocks have done well. Don't assume that it means that you are a good investor. The true test of an investor will come when you manage a portfolio for 5 years or more. If you are still able to beat the index, then it's a good sign that you are capable of managing your investments well. We have observed many investors feeling very happy and their portfolio has done well but when they check, they have not been successful in beating the index even after many years of investing. In such cases, it proves that they have underperformed the market and you could invest in Nifty 50 index fund or ETF itself without taking extra effort and time. So keep this in mind in the future when you have invested for more than 2 to 3 years and assess yourself. End of the video, here is the question. How old is your stock market portfolio? A. Less than 1 year, B. 1 to 2 years, C. 3 to 5 years, and D. More than 5 years. If you are not the member of this channel, this is the time to subscribe, press the bell icon, send the video to all your friends. The video is good, press the like button. Thank you for watching. Bye bye. All the best.